See, this is a good team.
All right, ladies and gentlemen, welcome back. Episode 44, Chart Talk. Going through some market outlook, member ideas, some social media questions, and a whole slew of other things. Bennett, how you doing over there today?
I'm doing good. I think we're ready to get into this. We got a lot of charts to go over.
Yeah, all right, let's do it. Let's jump in.
Jump into the market outlook.
Yeah, let's jump right in.
All right.
So, I mean, very simply put, market is in grind-up mode right now. I mean, we've been in this uptrend since the March 18th lows, technically, but now it seems like we're just kind of hitting that grind-up mode. We've seen this market similar in like 2014, 2013, where we just kind of was on this like grinding uptrend, where it's like not the most beautiful moves higher, but prices are moving higher nonetheless. We're seeing a lot of rotation lately into financials, energy names, utility names, industrial names. So there's a lot of market rotation going on, maybe suggesting the coronavirus recovery. Those cyclical names, they're starting to bounce back a lot harder, meaning the recovery might be more swift than people anticipate.
Nice. Shake, if you want, I sent you over two charts. Again, last week we talked about like a real-time rebalancing lesson, so I have another one to kind of hammer this lesson in.
Yeah, I got the VDE.
Start with VHT.
You got VHT.
All right. So again, last week we talked about rebalancing. We'll try to give some more real-world examples. So in this example, say you had VHT and you had VDE. You had these two ETFs. One was healthcare, one is energy. In VHT, more than likely you're profitable in this position had you bought it basically any time in the past other than, say, the beginning of this year. And now conversely with VDE, you're more than likely down unless you bought it within the last month or so. So in this example, since you're up in this VHT, in this healthcare sector, as it's coming back into that retest, that prior high around 200, you can take some gains off in VHT. So you're selling some VHT, you're taking the cash from that, and then Shake, if you want to pull up VDE now, you would take the proceeds from VHT and then buy more of the underperforming sector, which would be the energy sector right now. So you sell some of VHT up into 200, some of it, not all of it, you take some of the cash from that sale and you pick up some more of the VDE, more than likely bringing your cost basis down, and you add up 354. And this is if you think about that example, you're selling some of the winner, you're buying back some of that loser, and you continue to rotate that money. You're always locking in profits and adding back to the weaker sectors. And in a year from now, VDE's back near highs and maybe have to pull back. Then you're selling VDE near 84, and you're buying, VHT back in those, the lower, mid 100s. So hopefully this is another more real-world example of rebalancing that we can continue to hammer in. Shake, with that, you want to announce who won this week's giveaway?
Was it? I think you should take over announcing it.
All right. Well, if you want, just pull up the next.
I don't know who fucking won. Oh, okay.
Well,
I gotta read these emails, huh?
Yeah.
Tom Ramsey, congratulations! Woo!
So Tom, if you can, when you're hopefully watching this, just shoot us a DM of your address on Instagram, and then we'll get this box up. We'll get a stress ball sent out. We'll get a couple stickers, a couple of little knickknacks, maybe some $100 toilet paper roll. And then for next week, guys, again, this week we picked who got the most liked comment. Next week we're going to pick something a little bit different, but same premise. If you like, comment, drop a thumbs up or share. We'll count those as entries, and whoever wins next week will get. Shake, you can't see it, but this is next week's winning.
I don't know if they can see it either. You might be a little frozen over there.
Yeah. Well, they'll be surprised if you can't see it. So congrats, Tom Ramsey, and we'll see who wins next week.
All right.
Shake, we can jump into some of the member ideas.
All right. What are we looking at?
So first we got David Taylor.
It's that Tesla, huh?
He mentioned Tesla, but it already went. He was looking at it through 835.
It sucks. I know. I was loving this chart coming into this week, but they just took it away from us. They gapped it up Monday morning and let it run. Now this thing is probably on its way to a new all-time high soon.
Sam Pirelli still has this from 180.
No way.
Yeah, he still got like 3 or 4 shares. So I think he's up
Shouts to the god.
Let's see. Another one is this EXPD through 77.
Nah, I tend to avoid these, so I know what he's looking at with this, nice technically at macro level. But what I see right here is a very, very choppy chart. Not very hard resistance line, just a very choppy chart. So if this stock does want to move higher, it's going to be a fucking chop fest to get there. So there's just so many good charts out there right now. I would avoid choppy names like this.
Yeah, even with this name, is that you got to really give it verse like 71. And it's just hard to give, like you said, this name's so choppy. It's hard to really give this name that much room when there's better stuff out there. The next one he was looking at was Microsoft through 187.
I mean, if this market stays up, and this NASDAQ keeps trending higher, there's no reason this won't break all-time highs and just be another one of those names that goes parabolic type thing. So, while this market is staying up, yeah, that looks good.
Mm-hmm. The only thing maybe I would, if he does like it, maybe buy like 185 versus that 180 low, so you can get into like tighten up the risk just a little bit.
Oh, I like that.
So that would be my little tweak. Next, we got Gina. She had a question regarding how to manage multiple accounts. Jake, if you want, I'll take this one. So she mentioned how to manage multiple accounts, meaning if you have a longer term account versus like a short term account. So what are some simple approaches? So for most people, if you're working corporate job, you're gonna have a 401k. Regarding that long-term account, if you're checking that account more than twice a year, it's probably too much. You set that account up once, pick the lowest S&P fund that's available, and just set it and forget it. You're not really trading that account.
Bennett,
yeah.
Every time the market ticks highs, I check my long-term account. Is that good? When I see the market ticking highs, I'm like, oh, let me see that Vanguard. Oh, we're popping. Right, so check it twice a year.
Yeah, so no, but again, your step is a little different. So again, for 401k, once a year, that's probably the most you should be doing. You really shouldn't be changing that at all. Just again, leave it in the lowest cost SP fund, keep it as simple as humanly possible, and then we get down to the two that most people can actively watch much more frequently, like you just mentioned. And we'll break this down into your IRA, your SEP, traditional or Roth, and then your taxable. The taxable account is one we lean more towards that being like a long-term account from a tax standpoint. Again, that if you're checking it, once a week, once a month, that's probably enough. Anything more, when things are going in your favor, you're going to want to try to get cued and start selling some of those winners. When it's a longer-term account, you should be really looking down the road. With the more aggressive account, that's like our IRA, the Roth IRA, the SEP. Those are accounts that we trade because we have a tax benefit. Where if Shake's making $100,000, $200,000, $300,000 a year, and he's making it in his SEP IRA, he doesn't owe Uncle Sam anything. Doing this is taxable, he owes Uncle Sam a check. But again, this works for people that are making money every year. If you're not, you want to do that reverse. But again, the more aggressive accounts, you're more likely to check, daily, every couple of days or weekly. The longer term accounts, the less you can watch them, the better they're going to perform because you're going to have less times to make mistakes. So hopefully, Gina, that helped answer some of your questions regarding the difference between a few different accounts. And Shake, we're gonna.
You just put my finances in the streets? Is that what's hot in the streets?
I don't want to use like a Mike Smith example. I figured now we'll use a.
Yeah, God forbid you use yourself. What we got next?
All right, so next we got Alex Smith. He's looking at his MTLS.
He likes to do 28. Nah, I mean it's just very simply the buy was at 22. It might go higher. Oh, maybe he was looking at from this little wedge, 26 area.
So I mentioned this one a while back through 20.
Oh no, really?
Yeah. Well, I just was like, oh, yeah. The 20 was the buy. Actually, way too late on this one. I'm sorry, buddy. Let's skip. We'll go to another one. He's got out his VRSN. That 220.
Yeah, I mean that's a beautiful level. Just a macro level. Kind of got to give these things more time to work out, but it looks great.
Yeah, it does. My list, that does look good. So Shake, he has two questions. These are more geared towards you. So he goes, during choppy environments, we aim for support reversal buys, but if we see a breakout happening, should we avoid these trades completely or should we adjust our game plan?
Wait, so he's saying should we avoid breakouts completely?
Yes.
No, because there's trades like, let's see, this TDD still up. So like you buy this right now, the market's so strong that buying things on strength, you're gonna get bailed out and stuff like that. We're just trying to, elevate our games to have the best buys so that, we don't really have to have these low of day stops that we know are a bit arbitrary. Like people buying this TTD today were probably at a 305 stop, but we know that true support is down at this 275 level area. But, like for example, I bought this square today. This isn't a trade I'm normally buying. I'm kind of late to the trade, but it's got this huge macro level, and we're seeing all these names continue to break out with the market. So I'll take the trades as I see fit, but the best trades you're buying against support, and that's kind of, we're just trying to focus on teaching people that aspect. So
Yeah,
don't avoid them completely. Things have volume taking out a level, but I don't know. We're just trying to focus on the best of the best right now.
Yeah, I think even going with the SQ example, for Alex, if you're buying this SQ through 84, it's not like Shake is buying this at 84 and giving it to 76. He's buying this momentum break, and he's going to give it,
I'm giving
the dollar.
it 82. I'm giving it to the low of the day. Giving it $2.
Yeah. So if you're already in off support, those are great times where you can add through the breakout if you already have good stock, and if you didn't have that opportunity and you have to just buy through the breakout, you have to be much tighter with that risk.
Yeah, and I know I'm chasing this move, but I also know that the market's so strong right now that I can get bailed out. So that's kind of my psyche going into this one. But I get what he's saying. But we should be focused more on the support buys.
And then his next question, he goes, if a sector is looking like it's setting up for a breakout at resistance / going for all-time highs, we'll use VHG for example because that's pretty much this example. Do you pay closer attention to the stocks that are in that sector to take any possible trades?
Use what, for example? I didn't hear what you said.
So he says.
No, I heard the question. I didn't hear the stock you said, for example.
Because the sector, so it's like VHT is basically this thing he's referring to. It's like a sector setting up, flagging near highs. Would you then look deeper into that specific sector for possible trades?
Well, yeah. So look, we look at this VHT healthcare, right? And it looks just like this UNH chart and very similar to this TMO chart. So a lot of these names are going to trade the same. So absolutely, I'm always looking to the best of the best. Right now, I was looking at IBB has this multi-year kind of flag going on, and that's trying to take out the level. So I'm looking at biotechs a little more closely right now. But for example, but to answer his question, then yes, absolutely. If a whole sector is strong, you want to focus on that sector for sure. But right now, there's so many things strong. The market's just grinding higher.
Yeah. So big yes to question number 2. Next we got Anish. She's looking at this Roku.
You say Roku?
Roku, yeah.
Roku. Oh God, this fucking Roku. I tried to support buy this one. This day I got pushed out, and then this day and I got pushed out, and then that was the bottom. I mean, if this bottom sticks, really the trade was. So it has this earnings gap, right? Or whatever this gap was. This power gap. We love power gaps. It took out this low, shook everyone out, shook me out, and then promptly reversed. That was the buy on this Roku. So now, yeah, you can buy it on the way up through this next support area. 114.50 is he saying? 115?
Mm-hmm.
Yeah, so that makes sense. Yeah, through that area. You just kind of got to give it a little bit of room, but I like it.
Let's see. Next, we got Daniel looking at TXG.
TXG?
TXG through
10
82.
times. The best name in the market. 10 times genomics. 10x. Nice. I love the igniting day yesterday. We saw the high volume kind of break of this consolidation area. So now the next entry we would look for, since it's not too far gone, it's still within this flag, we would look for an entry through this 82.50 area, the highs of that ignition day. But yeah, that looks good. I like that one. I love this name. It's fucking crazy.
Yeah, it is a little wild.
Yeah, I mean, you got to be smaller in this kind of name because it's so thin. So, for example, if you have a stop at this low of day, 76.60, you're probably getting filled at 76. So you just kind of have to recognize these names carry a little bit more risk.
Let's see. Next, we have Nicholas looking at Walmart through 124 and then 126.
Yeah, I like this. Andres shouted this one out to me this morning. I was like, fuck yeah. If this can turn up, we want to buy this on the way up, 124.50, 125 area. If it breaks up. If it breaks down, we want nothing to do with it. But if it breaks that 125 area to the upside, proving us the buyers want to hold the support, then yeah, we're looking good.
Now, if this can pull back into this 120 area, Would you look to buy up through like 122 versus that?
Yeah, absolutely. But again, we want to see it push through an area and then reverse higher. We don't want to buy on the way down. I got caught buying on the way down that Roku, as I was saying, and I got pushed out, for example. And then it did exactly what I would want the stock to do. So, but I didn't capitalize because I wasn't focused on buying on the way up. After I saw it, the buyers come through with some support level. So as long as it's on the way up, we're looking good.
Gotcha. All right, let's see. Next, we have Jake Fox looking at McDonald's at 190 area.
MCD, I'm trying to kick this habit. This looks pretty good. I mean, it could grind higher. I'm not in love with this one just because it's kind of like a mishmash area, heavy resistance. Just kind of, I don't know. I don't like this just based off this heavy resistance area, kind of off this pivot.
Yeah, this McDonald's, what he's looking at, it reminds me a lot. I think he's looking at Nike.
Yeah.
And it just seems like it's still too early.
I just typed up Nikes at highs.
Well, that's what I'm saying. It's like when he was mentioning Nike was like the end of April,
right,
when it was at 90 and it ticked up like $1 in reverse, and it still had to kind of chop around 90 like 2 or 3 more times before it really went. And that's exactly what this McDonald's reminds me of, where it looks so good through, like the 190 is so clear and it's such a tight little flag versus 185, which is what I think he's looking at. It just looks too perfect where it just kind of has to chop around and mess with people like Nike did for that next month before it really had that push through 190 and had that next push to the, for this to be back up to 220. And then the other one he's looking at is similar to Starbucks through this H. Yeah.
I like the Starbucks. But very similar how it's just like the name's come a long way. It doesn't really look like it has that juice left. It looks like it needs more consolidation here. I know that Nike was just like popped to all-time highs, but you can't think every trade is going to work like that.
Yeah.
Right now,
it's
trending.
You got Carly B. You got CRM, your book of the week.
Wow, look at that.
He's looking to 175 versus 170.
Yeah, I mean, this is, Carly B, he's always got these, he's always talking his book. This guy's long from 165 over here, I'm pretty sure. And he's like, yeah, buying to 175, tries to get it pumping in the chat. I see you, bro. I think on a long-term perspective, this name looks good. Oh, he's saying buy up through against the support level? Yeah, it looks pretty good for now. Strong name, strong sector. If it holds that area, buy on the way up. That's kind of the similar theme that we've been talking about we're trying to achieve. So definitely makes sense.
Next, he's got this ADP through 150. And if you zoom out a little bit, you can see the level that he's...
Yeah, very similar to McDonald's type thing. Very defined level. It was support at one time, was resistance at another time. Now it's trying to break the resistance and possibly turn it to support once again. All these names, they're tough for me because I know this is a heavy resistance area right here, this 150 to 160. So they can work out. It's a nice level. The market's been strong, so I guess technically it makes sense. But that's not where my focus is right now, personally.
Yeah, that's like when you talk about like the 10x genomics versus a name like ADP or McDonald's. It's like the complete opposite ends of the spectrum.
Right.
We're talking about the overall moves you're going to expect from those names.
Exactly. Good point.
Let's see. Next, we got Ricky. He's looking at his VMW.
VMware,
and then he also, he had more of an earnings question. He mentioned how VMW as well as Dell both had decent earnings, both kind of gapped up into previous resistance areas, and he was saying like could these names sort of be a little bit more in play, given the good earnings reaction to them.
Absolutely, because I'll give you a great example. This FTNT last quarter, 2 quarters ago. So VMware. Let's look at the similarities between the charts. VMware just gapped up to this macro downtrend level, right?
Mm-hmm.
And it looks like it needs consolidation. You don't really want to buy it off this level. Moving averages are far away, things like that. But here's the thing about these power earnings gaps is that there's a lot of strength behind them. So this FTNT I'm looking at right here, and here's the day I'm looking at. This first earnings from October 19, November 19, that area where it gaps up to this macro level, and you're like, fuck, like I want to buy this thing, but it's just up so much. And then what's it do? It goes on this incredible run and takes out that level, and here we are. And it goes from 90 to 120 very quickly. So while that VMW looks like it's up too much type thing, I wouldn't be surprised if it were able to do that because it has that earnings power behind it. People don't realize how strong earnings power is. So for this VMW, it's tough to buy, but I'll probably buy that 157 versus 151 on a macro basis. Just knowing what we know about these type of trades like FTNT.
Yeah, even with that FT&T, I actually traded this name end of October. I bought 80, and
I
I
remember.
sold.
Yeah.
Lily got something like 105. I'm like, Lily got the top of this name, and like a month later, I'm like, I'm an idiot. It went to 120, and it came right back to the price. But again, I didn't get back in. But just like you said, it's like they can once they start to go, they can go as far as they want and much farther than we tend to assume they can go.
Right.
But now between BMW and Dell,
You say
which
Dell? What's the other one?
yeah,
Dell?
Dell, yeah. We haven't traded this name in
Oh shit. Yeah,
very, very long
I haven't
time.
seen this chart till you just said it. Yeah, I like VMW better, to be honest. I like the sector better. These huge mega cap techs, I don't love trading. I mean, we've done very well with Intel this quarter. Um, so I mean, the trade setup's still there, but I just like the VMW sector better. That
Mhm.
cybersecurity. What do you think?
Oh yeah, I'm with you with the BMW as well.
Yeah.
Let's see. Next, we got Khan. He's also going to McDonald's. We'll skip that. We already went over it. It's AGIO through
Agio, huh?
4, 5.
So this is a biotech. I mean, we were looking at the IBB earlier, which is the biotech index. How those names are starting to go, and now no surprise, we're seeing like the biomarin finally breaks that 100 level that's been resistance for 5 years, and as the IBB is starting to break out to new levels, so things sector strength definitely makes sense. Where does he want this one?
For
54.50.
AGIO, it's that 54, 55 area.
Yeah,
So,
yeah, yeah. Yeah, that looks good. Macro level. We're seeing these biotechs that are taking on macro levels break out really well from them. Another one that comes to mind is this Regeneron, who has this all-time high level here, like 600-ish, and it's already been up too much. And then what's it do? It takes out the level on massive volume and continues. So this biotech sector's hot. It wouldn't surprise me if this took out the level and really broke out from there. So I like that one. I'll put that on my list.
next, kind of had a question, and this is you can pull up PFE because it's a relevant example. So he
Pfizer.
said aside from the 15-minute rule, how do you deal with
Oh,
positions that gap against you? So he bought Pfizer up through 38 over the weekend. They had the news that came out a gap down, and now he's kind of trapped in the position where again it's working its way back in his favor, but he's asking what should he do if he gets caught in these bigger gap
I mean,
downs.
that's just brutal. Like, if you look on this chart, there aren't many gaps like that. So to be in it, swing trading on a short-term time basis, and for that to happen is very just unfortunate, very unlucky. And it was like some drug, right? Some drug trial, whatever. I mean, right now he has to put his stop below this 34.91 low, that pivot low, and just kind of try to get it back, maybe sell break even or something. Or a lot of times this happens to me. I'll just take my lump and take my loss and move on. But if he's able to stay in it and he can hold it against this 35, this new support area, then try to make the best of it. But that's just very unfortunate, really. That doesn't happen too often.
It was like a year ago. I forgot who. Can't think of who it was and what name. It was like a $20 stock, and it gapped down 20% that day. And I forgot who it was. They used the 15-minute rule, and it completely reversed and filled the gap like entirely,
They
and he
held
got
it?
out even.
Oh,
Yeah, like
God.
at the end of the day, it like completely filled it back. He really like broke even the trade, and they were probably one of the craziest ones that I've ever seen.
Uh-huh.
Of completely reversing that move. But I think for something like in like a Pfizer where it gaps down like 8 or 10%, you got instead of the 15-minute rule, you kind of have to give it like that day to settle, and the next day is going to really show its hand. Where if that low was 35, it opened today and was pushing at 35, like you said, you got to just kind of take that lump and move on, or else you kind of get trapped in. If you look back a few months when Pfizer went from 40 to 30, you kind of get stuck in one of those moves, and then you're in it for a year before you get back to break even. But now if it like for this one, it's filling into that gap, he'll eventually be able to get out break even if he can respect that 35 out. So that's you have to kind of adjust that game plan and kind of shoot for getting out for break even, kind of best case scenario in a trade like that.
And I'll tell you something. You can have the big up days, but the days that you come in, you're like that the $20 stock you're talking about where the guy got out break even. Ooh, those are the best days of trading where you're just like, oh, I am break even. It's so funny how it works.
Yeah, even for me, I'm thinking of I got stuck in once like way back.
Oh yeah, they're
Like
bought
way
out
back.
since.
This was like back in
Really?
2016.
What?
Well, I had it up through like 100, went to like 120, and it gapped down, and it took me almost like a year to kind of get out of it. And now it's like looking at it, it's like the dumbest thing humanly possible. But well, it's they bought
I
out.
can't
So
even
can't.
type. Yeah, I tried to type
Yeah, I
up the
can't type
chart.
it out.
Yeah,
But
yeah.
I didn't remember the trade. But that's when you get stuck in those trades. That's a part of trading. But when you get stuck in those trades, that if when you begin a trade and you get pushed down, you lose 10, 20. Those kind of get discouraging. But if you can work your way out of that trade and turn it into a winner or a break-even trade, it's like it's a great feeling. I know Gina had a few of those herself. Maybe we'll get next chart talk. She'll bring up one of them. When you can get those trades out, it's definitely good. Let's see. Next, we got Tommy Branner looking at this DGX through 124.
Oh. Hold on. Some keyboard troubles. Through 124? Nah.
124.
Nah, I mean, I see the level. Here's the level they're looking at, this like macro area type thing. And yeah, it looks like it could move higher. But like, look at this run. The last 4 days, it reversed, touched 110, and now it's at 123. You want to buy 124. So it could go higher. I just think the risk is too much, and the reward isn't enough. Yeah, personally.
Yeah, I'm with you on that. And the other one is this KMB through 144.
KMB or D?
KMB, Kimberly Clark.
Yeah. That's a nice level. I mean, Carly B was calling this one out. This like 130 after the reversal. It's like 137, 138 area. That was a really nice buy in this one. I think this one goes higher, but this is like one of those grinder names. So it's like you kind of buy it. You set your stops, and you don't think you're gonna make 10% a day. You got to be very patient. Like I just bought this Costco very lightly. We'll talk about this later, I guess. I'm not expecting this huge breakout anytime soon, but I'm in it and I'm light, and I like the trade long term.
All right, so we can jump into a couple social media questions. Let's see. We got Vishal. If you look at this Oracle, 354.
Vishal. This guy hits me up more than guys.
I know. He's the only guy like in the update chat.
You gotta respect the hustle.
Yeah, he'll be back in office, and I talked to him.
Oh hell yeah! Yeah, I like this Oracle a lot. 54. Right now, it's just kind of consolidating, but once it can take out that pattern, it's going to be a really nice entry, really nice buy. I like that one.
And the other one he's looking at is MU through 48 and then 50.
Yeah. Oh, nice fucking candle. Oh, I might. Market's still going on, and what we have 2 hours, 20 minutes left of market time. I might have to buy some of this MU right now. This looks amazing. I'm not going to do it because it's live, but when I hang up this call, I think this is good right here against the pivot. But I mean, through that 48 looks really great.
And then MBT 100. And if you zoom out, you can show the people watching the level he's looking at.
Yeah, I mean, long-term level here looks pretty good.
And then
MBT though, yeah, I like that one. Nice.
And he has two questions. He says, if an analyst downgrades a company, does it affect the technical setup?
No. I mean, it takes kind of a while to learn like what the big downgrades, when they actually matter, when they don't matter. I don't really pay attention to upgrades, downgrades too much unless it's like something like massive, like this $30 stock that they said that Goldman, like a huge bank like that, gave like $100 price target. Like, if something's very obvious like that, I'll take notice. But for the most part, I'm ignoring upgrades and downgrades. These are just guys trying to do their job. Like remember the guy? Oh my God, remember the Snapchat downgrade? And I was like, it was May 1st. It was the beginning of the month, and it got downgraded. We all got in it. I'm like, I'm not fucking giving. Like, I'm not just getting out break even. Like, this guy's been downgrading the stock since like $5, and now look at the stock. It's like taking 20, like 3-4 weeks later. So I mean, maybe it'll affect the prices for a few hours, but long term, it's not going to really like affect the stock's macro outlook. I don't believe. And
you'll tend to see a lot of upgrades and downgrades when there's big price movements in the stock. Because even like
they're trying to cover their ass.
Yeah, every time the stock like gaps up and they rechange their thesis, it's like based off that new price. So if he's been saying it's been trash since 5, and he says it's trash at 20, it's really only showing as of the $20 share price.
Yeah.
So that's some of the kind of behind the scenes stuff. When you see a lot of these big upgrades and downgrades happen, tends to usually follow, bigger, big up and down moves. And then his second question, he said, which approach do you guys tend to follow more, top down or bottom up, when it comes to scanning for setups?
Was he talking about fundamentally?
Yeah. Like, I know for me, like, I'm looking at, like, I start every day. I look at the major markets, then the sectors, then I work down into individual names, versus, bottom up, but he looks at individual stocks and sectors, and then I guess the broad market.
Yeah, I agree. I just bought a little bit of MU. I was waiting
Yeah. All right, so Vishal,
100
top
shares
down,
just to keep my
top
eye.
down. Start with the major markets, work your way in the sectors, then into the stocks. That's how we do it. You do whatever way you prefer, but that's how we do it.
When a stock has a move like this MU, whew, and then it pulls back, so controlled, then we see it start to pivot, and we can get that price that we wanted. Oh, that's 46.50. That's beautiful.
Shake. Let's
Focus.
I know what we do after the close. Chris Mora, shout out to you studying for your master's and still trading. Looking at his TXN, he was looking at it through 119 and it's breaking out, so he definitely has
semiconductors. They all look pretty good. We were talking about the MU. AMD's shaping up for another run. I think someone mentioned LRCX. What was the other one? And then it's not as much semi, but Qualcomm Tech. Yeah, so I mean that whole sector's looking pretty good, I'd say.
All right. G Stein, his question was, if you had $10,000 put in a long-term account, what would you do? Shake, you take it, and I'll tell you what I would do.
Like, what would I buy type thing?
Yeah, like where you got 10 grand, where are you putting it?
I mean, what's my time frame? When am I just buying
Long
this
term.
for
Long term, we'll say 5 years.
I'm probably gonna split it up at 5K. I'll do like 2 or 3 stocks that I really like for long term that are more aggressively growth stocks. And then I'll do probably 2 or 3 safer ones that are more dividend bearing. That like I always mention Verizon because it's just like the perfect example for that. So probably split it up so I can focus on some growth as well as focus on the safety and the long term aspect. Yeah, that's what I'd say. Jew, what would you do?
I think
I'm doing.
I'm doing 7,500 in the SPY and then 2,500 in BABA.
2,500 Baba.
Yeah.
Yeah, wait till they make Baba delist from the U.S. You're not gonna want to do that.
I'm with Baba to the grave.
Right.
That'd be how I would split it up. And then he was looking at this WRTC.
What was it?
No, some garbage. WRTC. Cheap, at least an IPO.
Nice. 5 to 9. That's a nice move. What the fuck is it? Rap Technologies? Oh, it's got to be some like Riot shit. It probably is.
Industrial conglomerate. I never heard of it. I'm not sure what it is. But he wants to look in and buy through 9 through the IPO highs.
All right. Cool.
Yeah.
No, I don't like this one. I mean, he wants to buy through IPO highs at 9.
Mm-hmm.
It just went from $5 to $9. It's tough to buy that one.
Yeah. G-Stein, we don't buy cheap stocks.
Yeah.
All right.
I'm trying to figure out what the hell they do.
Yeah. Jake Lundstrom, ICPT.
Oh, haven't heard this one in a while. Oh, yeah, I like that. I like this
Through
bottom bounce setup.
Yeah, through 75 versus 70.
Yeah, that looks nice.
I like
this is a spot, because this is like the spot to be buying things. It doesn't look good yet, but we can see it turning this previous resistance level to new support, and it's trying to work its way higher. So, this is the proper time to look to buy this thing. Whereas like the squares and like the SQ that I bought today and like the TTD, it's a sexier buy. But this is the more proper buy that we're looking to teach much more these days.
Mm-hmm. Yeah, I definitely agree. This is one where like when it gets back to 95, everyone would be like pumped to buy it, just like this SQ and the other things you even mentioned.
Exactly.
Where this is the harder, it's the quieter buy.
Right, exactly.
Let's see. Next, we got I can't even pronounce his fair name. But anyways, Mamarish. ADI through 116.
Yeah, it's already starting to go. Yeah, that's nice. The best buy was a little 113.50 today off the open, but this is the macro level here. Yeah, it looks good. I mean, macro level looks pretty good. More of a grinder stock, same thing. Same thing we've been saying with a lot of these big guys.
One that he mentioned.
Semiconductor.
He's looking at this Yandex as well.
Yandex? Russian Google? Oh, yeah, no.
YNDX.
Yeah, I know what they are. We'll avoid that one. It's Russian Google.
All right. So we went through all the social media questions. We have a couple of the good trade, bad trades. We're going to start with some of the members. Shake, you're going to pull up that email and start with Shabad's trade in ONEM.
Oh, I'm in this for long term. This is like no, not ONEM. Never mind, different one.
ONEM.
Yeah, that's what he is. I'm in something else.
Right.
ONS. I got it up. I got it up. Sorry.
What do you have? You want to go over this one? Because you can see it.
Oh yeah. Okay. I was watching. Yeah, I love this. So he saw this previous resistance, turned to new support. Started like we were saying, when you see something break support and then comes back to reclaim that level, that's when he's looking to buy it. So this is a great buy, great entry. Took half off into strength today, and he's swinging the rest. So now he's got house money. Great trade.
You want to pull up his next chart? It's like a
Oh,
15.
ooh, okay, I got it.
Breaks it down.
Yeah, no, I mean, he bought the retest. He got solid strength off the open, gave it to today's lows, sold some into strength. House money, love it.
Great trade.
Who we got? Adam Chatty.
Yep.
Nice, I like this. So Pterodine coming after this descending resistance area. Strong move up. He's buying that strong move up, giving it to this low, banking on this resistance level breaking, and now he's sitting pretty. He's got some good stock. Love it.
And it's trading. It's like another 2.5% higher today. It's at like 69, so it's still in its after.
Hell yeah, even better.
Now, Chad, if you can hold some for that retest 82, that would be a man's trade. What you call it.
For the retest of 82.
Yeah.
Yeah, to here. All right. Yeah. Oh man, this work. We'll see this work later. My good trade, bad trade. I fucking. I entered so well and exited shitty. So he bought this breakout level, kind of 32 area. He's been selling it to strength. He didn't get shaken out. I got shaken out this day. So nice move. It's so funny. I was buying down here and I got shaken out here, and I was like pissed at it. And he was buying that area and selling higher. Good job. I mean, this work is fucking a beast right now. So
yeah, it's even up another $2 today.
Yeah, I know. It feels great to not have any.
Now we can go over one of his bad trades. This Snap.
Snap. All right. So I think. So entry on the way down.
If you want, I spoke with him a little bit on this one.
Yeah. It's up on the screen.
So again, we've been reiterating the lessons of buying up off of support, and Nicholas has been one who's been trying to put on these trades and learning the bumps and bruises, figuring this out. And the first mistake he made with this was he didn't buy up off support. He bought down into support, and that's what we never want to do. We never want to try to catch support. So when he was wanting to prepare for that $18 breakout, he bought on the way down and then randomly got stopped out. And that was where we spoke about where he actually got stopped out, that red circle. The following 2 days after was really when you look to start to buy up. And that was one of the main lessons that he learned was, when we're buying up off support, we're not buying when it starts to break down. It's a habit that we don't want to replace. So he definitely learned a little lesson from that one. And then, Shake, you want to pull up Tom Ramsey, that DraftKings monster trade.
This is one of the stocks I'm so mad at myself for not buying in the long-term account right when they IPO'd. But I got it up if you want to.
Yeah. So he bought this one way before it was on really any of our radar. He bought it up through like that 17 area.
Yeah.
He kicked some into 30. It's set up again, and then this is something I think he did amazingly, and I think is a very difficult thing for most traders is, you make money in the name, and then you successfully get back in for that next leg.
Yep.
And I think this is something he did, phenomenally, was that he rebought even higher than where he sold, and now he's just trailing it, versus the low a day. And I know there's a few other guys in this, and it's one where it's like a low a day stop because now it's getting a little bit parabolic where, once these things turn after a couple days up, they turn quick. So I know his stop he's probably actually out. He had like a 39.99 stop in, so he's out of that again. That was a great trade. Let's see. Next, you want to pull up Moffitt's trade?
Oh, I got it.
AA.
It's up.
So this was actually one of his best trades so far with us. He mentioned. You can see here it was a sport buy versus low a day, very tight risk. He got he kicked into that gap up. Great risk reward. He's got it. This is all around really good trade. Break down on that.
Did he buy this for the body cam thing, or he just got ahead of that news?
I think that was just coincidence.
Coincidence. I don't know.
It's always
the SEC has entered the chat. I don't know.
I don't think he was not uncertain.
Okay.
Next, we got Natalie. You want to pull up her GFL trade?
Oh my God! I didn't know GFL did this. Oh my God.
I don't know who recommended us doing member trade reviews, but I think it was a great addition because you guys got some great trades going
Yeah,
on.
yeah, yeah. And then, it's good to know what people are doing, and that some people are catching these good trades. I put this on the shakedown. I was like, man, after this day, that was the weekend. I was like, no, this thing looks so good against 17. So boom, she bought it 18, stopped 17. She's fucking kicking into 21. That's great.
And
Three
now
three to one
today,
first kick.
yeah. And today reverse. So it's like now, again, you can't see on this
I,
chart because,
I can get it up. Look at, I
yeah.
got you,
So
bro. And we got that little reversal in, but she's kicking into 21.
yeah, so
Uh,
she's sitting pretty.
Everyone wants to
Um,
hold their winners until they pull back to you.
yeah. Then one of her bad trades is this PGNY,
Oh, I'm still in it.
and
This has been giving me a fucking heart attack. This PGMY.
um, this was a similar example with similar to Nicholas, is where again we've been trying to focus on these support buybacks, and for her mistake when she wrote about it, again she kind of bought on the way down, and again she got stopped out on the way down. So those are those things where when we're looking for support buys, it's much easier to let them get near support and give it a day or two and buy up than trying to be perfect and buy it first set support. It's just a much harder trade. And this is things that our members are starting to realize when they put these trades on. So with that, Jake, I think we did wrap up all the member good trade bad trades. If you want, we can jump into yours, and then I'll go over.
Yeah. So I'll just talk about this work for a second. It's funny seeing how one of our members traded it. I just traded it so differently, and then I sold it like shit. And I missed this run. So I first bought it this day here, when it was breaking up off this 2850 area, and I lightened up right here, this 3150. And then what I did well was when it retested, I got long again at this 2950 30 area, just against this new low. So that my mistake in the trade was that I was just sitting here holding, look great, and then this shakeout happens, and I just completely get out of my position, like it's been a good run, and that was coinciding with the market. It's easy to see on the cues. Okay, my fucking keyboard's not working. The market had this massive shakeout day, and that coincided with that. So we saw everything coming in. I was wondering, is this the top of the market? Is this going to be the move? Then it ended up just being a big shakeout, and they got me out of some good stock. And then, of course, that's how momentum is created with shakeouts. That's when the stock really decided to run the next 4 days. So I participated in the mini rally, didn't catch the really nice rally. And then as far as good trade goes, we have so many things going on that I'm still swinging. I'm still in the snap. I missed a great re-add here, but I still have some from this Core 17 buy. I still have this Intel. This is shaping up for the re-add again. But I lightened the load here, looking for a re-add here. What else I got? I still have a little bit of this AMED. I think I'm going to get ready to re-add here. We bought here, this 180 area. I'm going to get ready to re-add there for the next run. And then I had some Momo trades going on, like this PPD. I like this earnings flag right here. Love the action today. I'm still in this net a little bit. A really nice reversal today. So you can see we have a ton of things going on. I just bought, I got some QCOM. Looks great. I'm in this cost small. Apparently Micron I'm going to get involved in during chart talk. But I just bought a 100 share feeler. But I mean, we just have a lot going on, so it's tough to really. And then that'll be two good trade top ideas. So there's just a lot going on right now. It's tough to not a lot of ammo right now for new ideas because this market's just continuously ripping. What are you looking at, or what do you got? Good trade, bad trade?
So we'll start with some bad trades. We'll start with this Pepsi PEP. I think I sent you. I did send you.
This gave a lot of people headaches because it kind of chopped around the support area. I know what you're talking about down here.
Yeah, yeah. So for this Pepsi, and same with actually I got out of cost. So, but both my Pepsi and cost trade. So Pepsi, we bought up off support. We bought 131 versus that like 128 area, and I'm still planning to buy up to 138. But now that's coming back to my price, it's not really showing that momentum. Like has it shown the past few times it's kind of played around in this range where it comes in at 130 and then in a few days it's back in that 138 area, and that's what you'd want to see. But now that I see that it just keeps kind of hanging around here, it gives me the feeling that it probably wants to head lower or kind of retest the support. So I don't want to lose money in these names. And this is a lot of times that people ask, like, can you go over your bad trades? And a lot of times it's not that exciting. It's, I bought 131 in Pepsi. My stop was 128. Started to work a little bit in my favor. It's coming back to my price. and I'm going to get out for break even, and I'm going to lose, basically nothing in the trade other than being in it for a few days. And same with this Costco. I know Shake, you got in it. Did you get in today?
No, I bought it with you. With you. I'm small
Okay.
because what
Yeah.
did we buy it Friday or whatever?
I
Earnings.
bought.
This was earnings day right here. This
Yeah.
Friday.
I
Yeah, so I bought
bought.
like 305, 306 or whatever it was. I'm not huge at all. It looks like this chart still has a lot of work to do before it wants to break out, but I'm in it.
Yeah. So but I'm just saying, like, for my example, for Pepsi and Costco, both kind of similar things where the Costco I didn't really get off support. I got in a little bit later, but these are two similar trades where I bought up off support, and it's coming back to my price where I'm willing to just move on and take the break-even loss. And if it sets back up, I'll have no problem getting back in. But I'm not losing anything in either of these two trades, and that's like a factor that we try to reinforce. Where when you're wrong or your price isn't as good, you're willing to get out for as small of a loss as humanly possible. And then the other one, we can talk about this AXP. Shake, I sent you over a chart of that. And I'll break down the trade a little bit more. If you have that up, let me know.
Yeah, I got it up.
Okay. So this is a name I've been in for quite a bit. We've covered this in a couple of chart talks. And I dollar cost average into this. And now, again, we have three different trades. I have stock from 92, I have stock from 88, and I have stock from 80. Now, as it gets back up to this 100, 104 area, very quickly from the last buy, I'm not trying to sell the good stock. I'm just trying to get rid of the higher cost stock. So when it runs up into that area, I don't mind selling some of the stock that I bought from like 91, 92 to get rid of that. It's a smaller gain, but then I can let it sit up and I can sit with the better cost basis, the 88 stock and the 80, and just kind of let that one ride. So I can kind of trim and trail the trade and still keep the good stock for the bigger moves. That's been the better trade of the week. And then the Costco and the Pepsi, those are two that failed for me, but I didn't lose anything in those two. Those are my main takeaways for the week.
All right, there you go.
All right, and then if you want, Shake, we can jump into top idea of the week.
Yeah, so like I mentioned, this Qualcomm. I mean, this is right here. I might have to add as soon as we hang up. This 82 area looks really great. Now this MU's on my radar. I like that one a lot. This PGNY. So I love their earnings. They had a great growth, great revenue growth quarter over quarter, even with all the COVID shit. Turning this resistance area into new support. Gave us a scare today. Came down and ticked that 2350 on like 100 shares, and then like just kind of like ripped back higher. It's like, but it's still good. Still within the range. I would love a close over 2450 today. And then yeah, that Costco in time. But just there's so much out there right now with the strong trending market. What are you looking at?
I like this clack. Just like one of Alex. Yeah, KLAC. Yeah, just like Alex Smith's question was like, would you take a breakout? And it's like clack through 180. I have no mind buying up through that when it's ready. But also if it comes down into this 170 and it can start to turn back up, higher, and I could buy it off of, some recent support, I have no problem doing that either. So this is kind of one that, I'm willing to either buy through resistance or buy above support, depending on how, it sets up.
All right, like it.
Yeah. And with that, I think we jump into book of the week.
All right, let's jump right in. So I really just got this one in. I haven't dug into it at all yet, but it's Mark Benoit. It's the founder and CEO of Salesforce, like one of the best software companies out. The Power of Business as the Greatest Platform to Change. I just heard this was a really good book. A lot of good accolades and stuff like that. So excited to read it. Don't have much to say about it, but hopefully you got one with some stories, don't you?
Well, just going off that book, I remember like one of his big lessons in that book was how he didn't want to advertise like Salesforce on the buildings. It was like he thought it was like too much. It was like too much an ego thing. And then he was talking to one of like his billionaire buddies, and like, do it. Like it's like the best marketing you ever can do. Like it just puts you like in a different pedigree to like your other competitors.
Right.
Once he did it, that was like his staple. With every building that they were buying, he always made sure like Salesforce name was on it. And then the other thing he does like for his employees, when he buys all the buildings, the top floor, he makes like almost like a common area.
Wow.
So the top floor is like for the CEO, it's supposed to be like the most baller.
Right, the C-suite, all that.
He makes it for like the regular employees, where like
smart guy.
Like a WeWork, like the top floor is just like a cool area
Right.
to hang out. Those were like two of his things that once he started to put his name on the building, those were like his two things that he learned like after becoming like a multi-billionaire when he started like.
Okay. All right. Very cool.
But that guy's a beast.
Yeah, he is.
Book I got, most expensive book I've ever bought. This The Money Making Secrets by Jay Abraham. So I just started reading this. It's like it looks like a textbook.
Yeah.
I think it was like $120. But a lot of
So wait. Jan told me if you bought 1,000 of those, we could if 1,000 to 2,000 copies, we could corner the market, and they would soon start selling for $1,000 and $2,000. Just saying. No one else listen. Cover your ears, everyone.
I mean, I think on Amazon there was only like 4 listings. So I don't know where this other.
So maybe he's already gotten started cornering.
Maybe.
Maybe.
I mean, that's why even for this book, I was like, I'll buy it. I'll just put it back on Amazon for $200 and I'm gonna read it. You know?
Right.
But it seems like Jan's watching Billions a little bit too much with.
Yeah. What's his name? Churchill.
Right.
Churchill. Why's the Churchill?
Yeah, that's a great book. This is more business related. This has nothing to do with trading. Same with yours. But if you want to spend $120 and you have a business, it's definitely worth it.
Well, that's like the ultimate marketing tool because it's like so specific to every business, right? I like ran through that book, like glanced through it type thing, and then I sent it to Jan. I was like, you're better off reading this than me. But it was like very specific to every type of business. I thought that was very interesting. So it's like that would be beneficial to anyone with a business.
Yeah, there's nothing very like specific. Like if you're a realtor, do this. If you're a car salesman, it's like very broad. Like take care of your customers, focus on them. Very simple stuff that people tend to overlook and like, oh no, that's too easy. I need to do something more complicated. It's like the simple shit is the stuff that usually works, and then you can make repeatable. That's been a lot of the themes so far in this book. But again, I don't want to divulge too many of the secrets because we're starting to use some of them.
Yeah, and because we're gonna be reselling that book for $1,000 on eBay.
All right, I think we wrapped it up. I think it's
all right. Wrap this baby up.
See you next week, guys.
See you next week.